Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. This week I also have 3 trade ideas for us to check out towards the end of the video, so definitely stay tuned for that. Let's kick off the S&P analysis with our sectors as we always do. Who was leading, who was losing, and where was the weight? The utility sector led the pack today, up 0.81%, whereas the energy sector was at the bottom of the barrel, down 2.64%. Now this is kind of perplexing, noting that both of these sectors, the energy sector and the utility sector here, are seen as defensive risk-off assets. You would have expected them to pair together more nicely, kindly, and on a down day, right, see them both together grouped at the top of the list. Simply wasn't the case. We're not going to read into it too much, but just something interesting to observe. In terms of our heaviest weighted sector, we know that's the XLK here, down 1.65%. Financial sector, the second heaviest weight, down 0.17%. And then the XLV for the healthcare sector, up 0.29%. So let's check in on some of these sectors and just ensure that risk isn't mounting in one place versus another. If we check in on the XLK, what we'll notice is that, obviously this run here has been absolutely monstrous. We've continued to make new all-time highs and higher highs, so it's okay essentially to see a bit of a pullback here. So no real concerns in the XLK. I would really only be worried about this if the chart wants to dip back down underneath 160, this prior breakout point from in here. So you can see there's still quite a bit of cushion underneath us. I would not be panicked in the tech sector as of right now. Let's continue on to the XLF for the financial sector. Zooming in a bit, what you'll notice is that it's begrudgingly going lower. It's not like it's an aggressive pullback like what we just saw in the XLK. It's really just kind of back and forth, back and forth, back and forth. And I think this is largely due to the fact that, the broad market certainly got some pullback over the past day or two. However, I think it's really based on rates, right? If we come on over to the TNX, and we'll wrap back up on the XLF and talk about levels in just a moment, but the main thing to point out here was obviously on today's session, rates went higher, which is a good thing for the financial sector and a bad thing for the tech sector. So it kind of adds up with what's going on here. There was certainly some, if we just take a look at a 5-minute chart, again, this is very interesting. Someone said that something, there was a bad auction on the 30-year bond, but look at this big spike right here. I think that's what they were referring to. Obviously, big spike in rates, and then they cooled back off, but overwhelmingly higher on the day. And if we, again, flip this back to a daily, what you'll notice is we're just chopping around in this general area right here at and around that 1.5. And 1.5, as we know, is a very important number. Underneath it, and the S&P dividend starts to become more attractive. And if we're above it, then obviously this, the 10-year treasury, does become more attractive as a quote-unquote guaranteed or low-risk return, right? So to me, this is kind of what's fueling that sideways activity, that grindy nature in the XLF. So let's come on back over to it. And here we go. Like if there's a deeper pullback, let's say that rates all of a sudden collapse and, tech really rallies, but it hurts the financials. We're simply looking at this area in here. We've talked about this in the past. It's really a zone from about 39 up to about 39.25, prior breakout point from here, a little bit of resistance. Then this is the gap, right? There's essentially a gap in there as well. So the chart does not scream risk. It's just saying, it's just following kind of what the rates are doing. And that should not really come as a surprise, knowing how closely these two things are linked together. So no real mounting risk that is visible as of right now. Obviously, if we get a break of this kind of resistance trend line here, you would look for a higher high, regardless of kind of what rates are doing. Obviously, if they go sideways, you can bank more on the price action analysis here. But if we get a higher high, then we can now afford a higher low pullback, right? So all things are fine here in the XLF sector as of right now. Let's wrap up with our XLV here for the healthcare sector. And this one, very similarly, nice sort of move higher and kind of just consolidating sideways after this run, as opposed to the aggressive pullback like what we saw in the XLK. So as of right now, you could technically use this as your higher low and want to see that 130-175 respected, but still remember that, even if we do break back down underneath and turn here, that would overwhelmingly be a higher low still, considering that this is the first major little pullback that we're starting to see. So is it over or not is the question to ask as of right now. Again, keep a close eye on 130-175, but even if it goes lower, I would say it's okay if we come into 129.50, bounce from here, as long as we make at least an equal high, if not a higher high, coming into this prior breakout point from here. 137 is the higher high to be watching for at some point in time. Again, that's very speculative speaking here. I still do think that 130-175 will hold, as long as there's no major vaccine news that comes out in the short term that throws a wrench in the entire healthcare system. So XLV not really posing a threat to the charts at this point in time. Let's wrap up the sort of behind the scenes look with our VIX here for volatility. And what you'll notice about this is that on today's selling, although it certainly felt hot and heavy, we never actually poked up and over that 2050 number, which we're always watching. So to me, not quite a buy the dip volatility event as of right now. Typically what we look for is the VIX up and over 2050, that to come into some sort of short-term bottom in the S&P, and then it collapses back down underneath, right? As of right now, we did not take that out to the upside. If the market continues to move lower, grinds lower, and the VIX does not pop up and over 2050, that's the instance where you basically look at it as more sustainable selling as opposed to, liquidation break type activity where you can, quote unquote, buy the dip per se, right? And quickly get that snapback rebound up to the most recent high. So as of right now, market is saying, you know what, this might be a little bit more sustained selling than we think, but just keep a close eye on 2050. That will be your telltale sign on whether or not it's a volatility event. One more look behind the secondary curtain at the VVIX. This one is where we start to say, okay, maybe it will turn into a volatility event, because notice where we are. We're right at that 120 ceiling. Generally speaking, as we start spending more time here, it's more likely that the VIX itself will pop up and over 2050. So just keep that in the back of your mind. Let's wrap up the sort of broad, or not wrap it up, but get into the numbers here, the actual tradable levels into the remainder of the week. Technically speaking, if you watched the weekly watch list from Sunday, you essentially knew that we were just managing expectations up here. Essentially, there could have been a pullback. It could have went sideways. We know that there's basically going to be some grindy activity up against these resistance trend lines here, certainly pulling back now underneath both of them. As we pointed out in the weekly watch list video, there's really no levels to pay attention to in here because we know that the market was just about straight up. So the main one to focus on still is going to be here at the 458.42. Anything underneath that puts into play the prior all-time high here at the 453. Now, do I think we're going there? I'm not entirely convinced, and I'll show you why in just a second here as we get on over to our internals. If you're not familiar with this screen, go ahead and get familiar. Top right-hand corner will tell you what this is all about. So checking in on the internals, right? Monday, fine, just sort of neutral here. Tuesday, fine as well. But on today's session, where it really felt hot and heavy to the downside, what did your volume read do? Where did it sort of bottom out here? Right around, let's just say it bottomed out at 150 million to the downside here. Typically what we look at for substantial reads where we say, okay, this is worth paying attention to, are double that, so minus 300 million. And we did not get there in terms of volume on today's session. So I really don't feel, or believe rather, that, it's like everyone's just dumping everything. Sure, there was some selling. You can't ignore that, but it's not to the degree where you would say, okay, the market is all out going to collapse and go down to some severe new low. Okay, so the volume saying that, the advanced decliners, same thing. Basically here, all positive still. Here, very grindy, and here in the morning, it really took some time before we saw that sustained selling, and even then, we didn't come down into trend zone. So again, I'm not denying the severity of the move lower here, but it was not sustained selling throughout the majority of the day, which is typically what you get when a larger downdraft in the market is going to develop, or there's going to be some sort of sustainable selling, and this here is proving that it's not really all there. Now, the one thing that certainly raises a red flag is, of course, this glaring issue down below in the cumulative tick. This is a read I don't think I've ever seen. So minus 7,420.33. That is, nearly insane. Look at all of the sustained minus 1,000 ticks that we've seen on today's session. And this really just goes to illustrate that across the entire marketplace, all at once, a lot of stocks were simply ticking down, right? This really doesn't have any bearing on whether we were above the prior day's close, whether or not there was more or less volume flowing into that stock. It's just simply saying that all at once across the New York Stock Exchange, a lot of things were moving down at the same time. And that's sort of, again, where this severity comes from in the cumulative read. But before that, on Tuesday's session, where the first real liquidation break came from right at the open there, flat cumulative read on the day. Monday, as we sort of saw that sideways to lower-ish day, a positive cumulative build on the day. Okay, so to me, it's not all adding up here that the market's just dramatically going to move lower, and we're going to see like S&P at, let's just call it 450 overnight. That to me does not seem like a likely scenario. Instead, what I think we should continue to pay attention to here are the market profile references, and we'll talk about how perfect this was. So check this video out if you're not familiar with the software. Top right-hand corner will describe what this all is. If you look at today's selling activity here, I'm going to scrunch up the chart. You can go back and watch the videos. You can watch the weekly watch list or last week's midweek market update. We talked in depth about this section of single prints and this section of single prints right here. Where did the market turn on today's session? Let me just hover the cursor here so you can see that. I'll draw a line. Boom, and boom. What did we say about where the market would turn if it's simply a liquidation break type event? At a very nuanced level, notably either a place at the top or the bottom of either of these sections of single prints. So the fact that the market turned right to the tick at a known area of single prints tells me that short-term traders are in control of this market. They saw this area, they saw the opportunity to buy, and now we are moving higher. Now, this doesn't mean that we're necessarily out of the woods for good here. We could certainly see some more selling activity. However, again, short-term traders in control. If this truly is going to be a liquidation break, it essentially took all of the short-term sellers out of the marketplace. The more we can retrace into the day's range in the after-hours session here. The main area to focus on would be the halfback of today's range. If we're going to get a solid liquidation break, we would need to be above the halfback, right? That would start to get these people here, the shorts late to the party at the point of control essentially, start to feeling some heat, right? They would start to panic a little bit, and I would imagine they start to cover, especially the ones that were late to the party in this section of the chart as we just described, if we can take out halfback and start moving towards this large high volume node towards the highs of today's session. So just to give you an idea, that would be 46.72 to about 46.75 we'll use as round numbers. So that's what I'm watching out for here from the market profile. Really not a whole lot of nuance to pick up other than that. Technically, the profile thinned out a little bit here in the middle, so maybe you treat these as two different distributions. So here is distribution number 2, we'll call it, since it's lower. Here's distribution number 1. So very simple. If we accept into distribution 1, that's obviously more bullish. If we find acceptance in distribution 2 here tomorrow, that's obviously more bearish, and maybe there might be a reattempt at the low of the day. But as of right now, we're sort of creeping up, right? There was a decent little reaction there to the single prints. We'll see if ultimately we can break back up and into the range number 1, which we've just pointed out. So that's really it from a nuanced perspective on the market profile. Before we jump over to the other platform to round out the broad market, I would just bring up the fact that in the NQ, we saw the same thing. So essentially what we talked about in the weekly watch list from Sunday was the fact that this entire thing here was actually a low volume node, right? We technically have single prints here and very, very thin profile. Look at the volume here, basically non-existent. And that's exactly where the market retraced to during today's session. Now, certainly a little bit more sloppy here. We dipped underneath the low of that Wednesday day, but nonetheless, like that was a great short trade. Even if you were just aware of maybe you take this breakdown here for the move lower, certainly worked out beautifully here inside of the NQ. Let's get back on over to the platform and actually talk about the candlestick chart now. Some levels to pay attention to. And again, here's just that void, the equivalent on the candlestick chart, obviously moving to that low. And as of right now, just like we discussed in the XLK, it doesn't strike me as that, like this is overly concerning. I mean, think about the run that we've been on here. Let's just take out the Fibonacci's and go through the exercise, right? If we come from this low all the way on up to the high, technically speaking, the 38.2 is very, very close to the prior all-time high in here at and around 382. So there is still some wiggle room to the downside, a fair bit of cushion for us to be within respectable reason of a pullback. So don't be surprised if there is a little bit more. Start to be on the lookout for buying opportunities, in my estimation, closer to 382.50 here inside of the QQQ. Obviously, to the upside, we just have these levels to retest. So notably, let's call this 389.60. And then after that, from in here, basically that low volume pocket that we had up to about 396, we'll call it for round number's sake, if there's some sort of turn into tomorrow's session. So that's really the QQQ in a nutshell. And then lastly, the IWM. As you know, we've been watching and monitoring this breakout of the overall range for quite some time now, just about the last week and a half, and we're currently pulling back, right? So all eyes are on this number right here. I mean, everyone and their sister can see it at 234.35. If we come into it, start printing hammer candles, start printing indecision dojis, basically things that make us question, right? Is the pullback ending? Can we now flip long over the highs and get back into this new all-time high? That's the place where the pullback buy essentially happens. So be on the lookout for 234.35 inside of the IWM. And obviously your upside target would be back up here towards the highs at around 244.50. We do know that ultimately speaking, our target should be closer to 255 if this is going to be a true breakout of this range here, the balance we've been stuck in for nearly a year now in the small caps. All right. So that's really going to wrap up the broad market. Let's move directly into these trade ideas. First one is on AFRM for affirm.com or Affirm Holdings, excuse me. This is the buy now, pay later platform. And what we're looking at is, perfect, move right into this prior breakout point from here, led to higher, and it's the daily 50 SMA. We have not tested that in quite some time. Now, do know it's fairly immature, right? It's a very young 50 SMA, if you will. You can see it's only started from back in here. what was that, February, March. So again, hasn't been tested. We don't have proven history here. However, coming hot and heavy into it, a little bit oversold in my estimation. It's not like, actually as of right now, I completely need to take this back because in the post market, we're trading up towards 170. Okay, so the buy reaction has already occurred. We're currently trading here after earnings, and I completely apologize. Did the scans before the numbers came out, and it would be unfair of me to essentially carry on with this analysis. So we're currently trading up around 170. I suppose the pullback buy is no longer in store at the 50 SMA, but my goodness, would that have been a great trade if we were able to get this price at the open for tomorrow morning. Unfortunately, not going to work out. What I would watch for, noting that, again, we're getting some volatility here. Let's clear this drawing set, and I'll walk you through the framework I'll use to watch this for tomorrow morning. Let's go to something like a 30-minute chart, and we'll turn on our extended hour session by coming into here. There we go. Show extended hours. All good. There we go. So again, certainly massive buy reaction to the upside. The one thing you would watch out for here is potentially a fade to fill the gap. Note that we have an overnight high up around 175.85. The overnight or anticipated open as of right now at 170.23. Remember, a lot can happen between now and 9:30 when the bell actually rings. But what we're about to discuss is a framework essentially in how to trade this. Okay, so let's turn that back off. So there we go. And let's flip on over to the daily now. That'll make things a little bit easier to look at. So we're basically, anticipated open is here at a known area of resistance, basically in an upper wick. So the first thing we should be thinking about is the gap and trap. Obviously, there was some hot and heavy selling in here. So people who essentially bought the dip are maybe considering taking profits, right? So that's how you think about this. If we open here, fail to attract new buyers up and over that new, overnight high as of right now, look for the short down through the open to trade lower into fill the gap. Now, note that we might not get the full gap fill right off the bat. However, there's a lot of choppy horizontal areas around 150 as a whole, so it should be just on your radar as potentially a downside target, but I would be more realistic and say that if you start moving into the gap, look for a half gap fill first before anything else. So we'll come from here with our fibs to the high of the day there. Notice that the 50% mark is right at 160. So about a $10 trade to the downside if we get the gap and trap. And again, anyone who is potentially buying the dip opportunity in here, the pullback, if they start taking profits up here, that would be the target first, and then of course the gap fill. So that's how I would think about that one. Again, apologies for not noticing that in the after hours we had already made that move higher. Looks like that we're going to take that one and run. Anyways, Snapchat is the next trade idea that I had for you. If we zoom into this chart, what you'll notice, we'll adjust this actually so it's a little bit easier on the eyes. There we go. And we'll take back out our drawing tool, draw in our flat lows. Basically, big flush point in play at 51.75. If it gets taken out to the downside, we'll hunt for our next major area of daily support. But as of right now, the main reason I also brought this up was because it follows what Twitter does very, very closely, okay? So let's find a target, and then I'll go and show you Twitter's chart. I would say that this is kind of next up, okay? So 48.60 we'll call it. So about, I don't know, I'm not that great at math. Let's just call it a $3, $2.50-ish move if we can take out that flush point here, noting that there might be a bump in the road about midway at 50.27, okay? But in terms of, like I said, what Twitter was doing, Twitter, I think, is going to act as a leading indicator to what Snapchat might do. We had this big sort of bear flag in here. Obviously, this sell-off from earnings, Snapchat just simply gapped down in the post-market, but this one's already starting to break down to the downside. So that, again, is why I think that Snap may be up next for that downward move. So that's going to be Snapchat. And then lastly, we'll round it out with CSX for a longer term trade idea, basically watching this one just like we are in, the XLK and, the QQQ for a pullback to the prior all-time high. This one, if it wants to give up this grindy nature here, basically flush out of this range, I would be a buyer at about $34.50, noting that it would fill the gap from in here. It would be the prior all-time high from there. Also just shy of it here, just shy, resistance in here. So looking at this as a break and retest inside of CSX if it wants to happen. Again, it doesn't have to happen, but if we come into 34.50 and we start printing things that look like a double bottom, could look like an inverted head and shoulders, could look like just a hammer candle down here, tight risks, stop under here, long over the top to get back into this upside target closer to, let's go ahead and throw that on the chart, 36.25. To me, makes sense, okay? So that's what I'm watching for here inside of CSX, and that's the last trade idea that I have for you. Again, apologies about AFRM, but that's going to wrap up the entire video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked, our secondary channel, I keep saying that, is linked down below in the description where we do about 10 to 12 videos a day on the underbelly of the stock market. And with that being said, I wish you all a green trading week.